What is going on, guys? My name is Family Shucks and welcome back to another video. So hopefully everyone had a lovely Thanksgiving. You were able to relax, eat some good food, hang out with some family and friends. But unfortunately the market was closed. You know, we can't look at the daily volatility of the market, and we can't put in any trades or anything like that. But to our good fortune, they opened the stock market for at least half a day, closing at 1 p.m. Eastern Standard Time on this Friday. But without further ado, I decided to do a quick recap for the month of November. Another month of selling options, mainly cash secured puts, and this is officially my third month of selling options. And I think I'm starting to get the hang of things. You know, things are starting to pick up the pace. I am understanding my comfortability and at least managing my risk a little bit better, and at least having some fundamental principles when it comes to taking profits on certain stocks, when to, play a little bit risky, and what options are worth it to sell, so that way I am not locking in my collateral for some measly gains. Because as much as I do like to have consistent gains, this isn't gonna get anywhere if I'm only collecting like 0.5% a week, So with that being said, going back to everything, this is a full month in terms of November, and I believe we did, how many is that? 7 trades for the month of November, mainly cash secured puts. And in the last video we left off with this trade right here on Rocket Mortgage Companies. I was selling a $19 put for only about $20 in premium, and this was a weekly put. However, at the time of me selling this option, Rocket was going through a downtrend, and it was very much below, I believe, the $19 strike price. So before it ended up expiring, I decided to close it and roll it out to the next week at a lower strike price. So you can see I rolled it out to the next week at a lower strike price of $18, collecting total a $73 premium. However, net credit of $26 between these two trades. So I was able to at least collect a small credit for this tested Rocket assignment, and ended up closing it all together when it was worth $3, locking in my profits at around $26 to maybe $24 overall. So honestly, it was originally what I was going to get with the first play, a little bit more. However, I avoided assignment, which is what I really want to do with the cash that I have on hand. So overall, if you don't already know, I'm only trading with about $4,500 in cash at the moment. So most of the time the plays that I am entering are low cost, like sub 20, maybe sub $25 stocks that I would want to hold for the long term if I do get assigned. However, at the same time, it could be high potential stocks that I see that have a lot of upside, meaning that I know, or at least have a good feeling that I will avoid assignment. Or it could be like a quick play, or a stock that's very cheap that has high volatility, that has good premiums on it on the call side, in case I do get assigned on the put side, that I can at least get some decent returns, again selling covered calls if that time comes. But going back to that, the next play that I ended up doing for the month of November was Rocket once again, collecting $33 in premium and closing that out a little bit early, because for the most part, I've been kind of dabbling with the idea of whether or not to let my options expire worthless, or freeing up that cash by buying and closing it on Friday in order to secure those profits and open up another trade, and also avoid any potential uncertainties in aftermarket hours. Because if you guys didn't already know, the assignment window is open until like end of day Saturday. So say if you have a put that closes $1 above your strike price on Friday, that doesn't mean you're fully out of the window, because going into Saturday, the stock price could actually dip down below your strike price and then you get assigned. So that's why on a few of my trades, I've been maybe closing it out a little bit early on, maybe say the morning or the midday of Friday, just so that way I can lock in some profits if it is a stock that I am somewhat uncertain about, or at least recognize the bullish momentum that it's having for that current week. I'll typically also let it expire worthless, so it's kind of stock dependent, I think, for me. But after this play on Rocket, this was kind of the last time for the rest of the month where I sold a put on Rocket, just because I saw that the premiums weren't really worth it. As much as I do like to at least stay consistent and kind of focus on the fundamentals that I set in place for myself when I started this journey, at the same time, I want to have a little bit of excitement, want to have a little fun here and there, and also kind of look for other low-costing stocks that have higher premiums. Obviously, you're having the whole spiel with, higher premiums means that it's a higher risk, but ultimately, if you're entering in stocks that you are comfortable owning, at least for some time, I feel like that's somewhat justifiable. But at least with Rocket, after this week, it started going back up into the $20 price range. I didn't really see it being worth like collecting 30 something or less dollars in premium for putting up maybe like $2,100 to $2,200 in collateral. I just didn't really find it worth it. So eventually what I decided to do was start looking at the stock Palantir, and this was prior to the whole meme stock and hype around Palantir over the past couple of weeks actually. At the time, you can tell in the second week of November it was trading for around $10 to $12, and I think that's when the hype started to really pick up to where it's now over $30 at the end of November. So it's been having a huge run up over this past month. But with that being said, the premiums on Palantir were very juicy. I was able to sell 2 contracts, putting up $2,400 in collateral at a $12 strike price, collecting $64 in premium, and letting that expire worthless for that week because it was having its huge run up. I think it was trying to go to like $14, $15, and at least with Palantir, this was something that I was looking at when it was still $10 and kind of wish that I bought into at the time. The reason why I let it expire worthless is because, like I said before, it is a stock that I would be comfortable owning at the $12 price range. And I started to continue that trend over the past couple of weeks. As you'll see, Palantir again, $15 strike price, and then Palantir $20 strike price, collecting those nice premiums, letting them expire worthless. This Palantir trade is actually still open currently, and most likely I'll let that expire worthless, or maybe close it a little bit early just to free up some capital. Besides those plays, I've kind of entered in other, I would say, riskier plays because I was kind of chasing the premiums with this one, kind of just doing a little bit of research and kind of browsing the subreddits of Wall Street Bets, Small Street Bets, SPAC, etc., just seeing what the overall sentiment is around certain stocks. And ultimately that led me to these smaller plays, especially with CORT. It's short for Corcept Therapeutics. The reason why I entered this trade was because it was a $12 strike price. I only put 1 contract in just because of how risky it was. So this is going back to the whole risk management with your cash. You don't want to go full YOLO on any of these plays just for the sake of premiums, because just in case it does turn against you and you end up bag holding, you'll at least not regret putting that much capital in for a potentially shitty stock. But for this one, Corcept, it was in a high IV environment at that current week because that same Thursday there was a big litigation decision coming out, which at least luckily was postponed till the next month, hence why it's continuing its bullish run. And the last time I checked, Corcept was sitting around $22, $23, so it's had an incredible run up since then. So with that being said, I did close it a little bit early, $5, collecting still a profit of $79, which is a 6.61 return. I closed it a little bit early because just kind of reiterating that potential volatility on Friday once the market closes, and then going into Saturday, I just still wasn't sure, so I'd rather lock in my profits right there. So it was a nice return, quick $79, $80 for the week, and something to be happy about. And the next 2 plays, excluding Palantir, was an Evolus, another quick low costing play that had high return for it. Gave me $35 in premium for only putting up $300 in collateral per contract. So this is going back to my play with Corceps. I wanted to manage my risk a little bit accordingly. Again, I could have actually put in 2 contracts instead of just 1, but this was a company that I was kind of about, just because, you know, this is I believe from what I've read, like a plastic surgery kind of company, something I'm not really big on, but I decided to try something a little bit different and chase premiums a little bit for this one, and that at least gave me an 11.45% return, letting that contract expire worthless. Now the last 2 plays to close out the month of November were in Palantir. Since I already know that this one is going to expire worthless, I'll just enter that in as 0 right now, but that one was just a quick play because I had the spare cash freed up and I decided to, you know, milk a little bit of extra change from the week, and knowing that Palantir was on an incredible bullish run, I decided to sell it a little bit out of the money, not too crazy. It was currently sitting around $24, so just anticipating a potential drop or sell-off if there was one. I would again be happy to buy Palantir at $20. Nothing to really worry about, again, like I said, and if anything I can sell some nice covered calls on them. But the last play to close it out was on Mara, Marathon Patent Group. This is a Bitcoin mining company, another small risky play. I'm not too big on Bitcoin just yet. This company right here is kind of following the trends of Bitcoin overall, the Bitcoin market. So, you know, if Bitcoin goes up, this company goes up as well. And this company, Marathon Patent Group, alongside of Riot, are 2 companies that have been mentioned a lot in regards to Bitcoin. But this was another risky play that I put in 2 contracts, $800 in collateral, collecting almost $200 in premium. Honestly, despite the fact of me not being fully convinced with Bitcoin and this being a very risky play, this was an incredible return on this one trade, giving me almost a 25% return. I would be fine with getting assigned with this stock just for the fact of it being low collateral, and also just looking at the current premiums, it has excellent premiums or monthly premiums for this stock that I wouldn't mind selling covered calls on if in case I do get assigned. But overall, for the month of November, as of right now, I've collected $504.45. This is including subtracting the commissions of my trades and all that stuff. So this is net premium for the month of November, coming in at a little bit over $500, and that has incredibly ramped up ever since I started selling puts back in November, or at least selling options. You can see I started off with only getting $33 in premiums, the next month increasing that to $100 in premiums, and now being a little bit more risky and playing the high IV environments, that has boosted my net premiums up to $504.45. So this is not going to be consistent at all. I'm anticipating probably December taking that down a notch as things start to get maybe a little bit more iffy in terms of the overall market, but at least I'll be aiming for maybe $300 in net premiums. And this is all being done with only $4,500 in consistent capital. My capital has stayed pretty much the same throughout this entire month because I have been using the premiums to buy stocks when I see sales and open up new positions for potential companies that I see have good growth for the long term. But with that being said, that was a quick recap for the month of November, making a nice $500 in net premiums, and hopefully I can continue this trend to increase the returns of my portfolio and just getting an overall understanding of options and comfortability in case I need some extra fixed income. With that being said, thank you guys all so much for watching, and I'll see you guys next time. Peace.